A major benefit of candlestick analysis is that it allows the candlestick investor to analyze what the investor sentiment is at levels that everybody else is watching. This past week, we had a little shooting star signal. This is a signal. And notice where it failed. It failed right here at this resistance level. What do we see the next day? Bearish confirmation. What did that tell us about our uptrend? The uptrend was probably over. At least the first target was back to test the T-line. This would have helped us make decisions on what to do with individual stocks that were starting to sell off based upon the market selling off. At the same time, the NASDAQ had not been showing any selling until it got to this resistance level, and it also did a shooting star doji. The analysis for the trends tomorrow become much more simplified by knowing what should happen after an indecisive trading day, like a shooting star / doji. The price is usually going to move. A lower open will tell us that this level was acting as resistance, that the NASDAQ is still kind of in this wedge formation. A positive open breaking through this level tells us they have broken out of this upper resistance. Our uptrend is in progress. That analysis can be applied to individual stocks. Yesterday, our recommendation on SFIX was based upon this Morningstar signal off the T-line, creating a J-hook pattern. However, when it hit the resistance level yesterday, it did a shooting star. However, our stochastics weren't quite in the overbought area. But it made our analysis very simple. If it opened lower today, that told us they failed at this level. You closed out the position. It needed to open positive and trade positive to tell us that this resistance level was not going to act as resistance anymore. When we recognize a bobble pattern, which is where they come up, fail at the a major support or resistance level, pull back to the T-line, if it opens positive and trades positive, it tells us we've got a bobble breakout, which is essentially a more defined J-hook pattern, which is a very common human nature pattern in candlestick analysis. The fact that it opened positive and closed back below the breakout level told us that this didn't break out. Any purchases during the day would have been closed out because this is a trade that was not working, that it didn't create the pattern as expected. Whether you're trading stocks or futures, the candlestick signals work very effectively on any trading entity that has human nature, fear, and greed in it, which is all investment vehicles. Notice the hogs of October lean hogs. Big bullish engulfing signal. Where was the next likely target? The 50-day moving average. When it went through, we had a dark cloud signal in the getting up toward the overbought area. Then we had a bearish doji sandwich. That, remember, the doji tells us that which way they're going to move it based upon how they open after a doji. In this case, they actually gapped it down and closed it below the T-line. We could be shorting as soon as we knew that it opened below or lower after the doji, with now a very strong downtrend in progress. So the candlestick signals tell you exactly what's going on in human nature, and they work very effectively when you're in the oversold area and see a buy signal, or in the overbought area and see a sell signal. Candlestick charts tell you what's going on in investor sentiment. Remember all the big political outcry that soybeans were being sold off hard because of the tariffs? That might be the reason. It doesn't matter what the reason was. With that little kicker signal trading back below the T-line, you could stay short until you saw a candlestick reversal signal to close up above the T-line and reshort it when it came back down. And then we saw a buy signal and a close above the T-line. Where did it go? To the first major resistance level, the 50-day moving average. Whether this was because of the tariffs, which it wasn't, this was because there are massive Abundant supplies of soybeans because of good crops this year. Once again, it doesn't matter why something is uh, proclaimed to be moving in a direction. Candlestick signals and patterns will tell you what it's actually doing. Right now, you could be short soybeans because, once again, the supply is huge because of good weather this year. And notice where it has failed. Failed at the 50, came back up, failed at the 50 again with a left-right combo, which is a doji type day followed by a bearish engulfing signal. Where's the next likely target? Probably at least testing the lows and possibly back down into this trajectory. Where it goes is just a projection where everybody else is watching. The benefit of candlestick analysis is once it gets to levels that everybody else is watching, you can make much more defined assessment of whether that is creating a buy signal at that level and it's time to cover short positions. That'll be it. We'll see you in the chat rooms.